Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 27th of August. Right, as we inch closer towards the Federal Reserve's Jackson Hole Symposium, right, bit of a get-together for the Fed. I think most of them are online anyway. We're going to find out the final details, if I can get that out, around this tapering issue, right? It's become a bit of a talking point, bit of a major focus for the markets around, if they're ready to start tapering their asset purchases, inches them closer towards an interest rate hike and positive for the dollar. Now, I think, if anything, we might be getting a little bit caught up now. Well, there's two parts to it, right? What we have seen in the markets themselves is the market is very edgy around this, right? And I'm talking mainly around the equity markets, right? And that inversely has been affecting the dollar block, euro, sterling, Aussie, Kiwi. You get a red day, which is a risk off day, euro, sterling, Aussie, Kiwi fall, and the dollar pairs, they rally, right? So it has been very polarizing, this whole situation. It looks like it's either they're going to say they're going to start tapering soon or not. Now, I think almost we can overthink it, right? This is quite common for the market. You can see the dollar just drifted lower. The Fed minutes a week or so ago suggested they were on schedule for tapering as long as the employment numbers continue to improve, and a few other areas as well. If anything, the currencies, right, major currency pairs, especially obviously against the dollar, are evenly balanced for a move up or down. Right now, I've adjusted most of these trend lines. You can see the dollar, we had that nice dollar uptrend, fell back towards the support line. And if anything, it's just been trading sideways since. It doesn't know where to go from here. What it needs is that next layer of information. That's what this, the comments, Friday, North America are going to give us. Taper, dollar rallies, no taper, they don't do anything. But I think it's actually even, I think we might just have a short term. If they don't start the tapering or say they're going to continue with the tapering, then I think the dollar fall will be very short-lived, because the underlying core fundamentals, inflation and employment, are quite robust, right? So this is only a bit of a blimp on the radar. I think if they don't say when they're going to start tapering, I don't think they feel under pressure. There is the uncertainty of the Delta variant. A number of states in the US sort of experiencing major issues with infections and all this sort of stuff. Think about the Fed. They're looking at employment and obviously inflation. Of course, they're sort of trying to factor in or consider the impact of the pandemic, but they're doing their best. So anyway, I think there's a good chance for the dollar to continue to rally, right? It will, short term depend on if they say, what their plans are around tapering. And they should see all these pairs rush to the downside once again. Okay. Now, if they do err on the side of caution, then we are going to get a situation where, the dollar may just take an immediate kick to the downside, and the setup for that is quite compelling. Now, you can see where euros just piped through that last resistance line. I'd just be adjusting that as we go into trading for today. Now, the key thing is, so if they say there's no tapering, I can see a quick 100-point move to the top side on quite a few of these pairs. Now, euro is perfectly positioned because it's pretty close to that resistance line, whereas sterling, it's got sort of three resistance levels to get through, and it's a fair way off, right? So sterling may have a bit of hard work. Aussie's not too far away, and we could see a little blip to the top side. Bear in mind, there's a massive truck strike scheduled for Australia next Tuesday. I think there's some have already gone on strike today. For those outside of Australia, the trucks do all the transporting of food, goods, supplies, everything, right? It's mainly trucks. So if they go on strike, it's a massive kick to economic growth. You'd expect the Aussie dollar to fall at least a couple of 100 points if it does all kick off. Now, the Kiwi, it's got through one resistance line, which I've deleted. You've got the next one here as well. The Kiwis are really focused on the pandemic issue at the moment. If they unlock everything, I think Kiwi has room to rally. If they don't, well, it stays subdued. But this is where the dollar comes in. No tapering. We might see a quick blip to take out the stop losses above these resistance lines. And then if they come out with no tapering, this is where I sort of get a little bit focused on it is, they go, okay, we're not going to taper just yet, but they'll have an explanation, and it more than likely will be, we just need to see the next round of data, which the employment figures will be out next week, right? So it could be as soon as next week, where even if they don't do anything now, strong employment figures, non-farm payrolls next week will correct everything anyway. So I'm not getting too caught up in a long-term weak US dollar situation, right? Unless they say we're not tapering yet, we need to see the numbers, and then next week's non-farm payrolls are really crap, then we start to see the dollar run to the downside. Outside of that, I think the dollar maintains its medium-term trend, which is going to be back up. If they say there's tapering, the dollar's going to kick into gear. We're going to see all these pairs fall again. So what I'm trying to say is the pairs right now are evenly balanced, right? For a move either side of the market up 100 points. Now, ideally, I'd love to be in either of those trades because I can see this thing sort of running to the top side pretty much on everything. But short term, I think dollar weakness will be short term. But so with this in play, how do you get into the trade? Well, this is the hard part, right? So now I was just having a look. So basically you need, so when it comes back, let me just explain this easier. When it comes back to economic numbers, right? We have a clear timeline of, generally when these things are coming out, okay? For your local time, there's usually a forecast. You can actually compare the forecast. You know exactly what time to look at the screens and see, and you can compare the actual result to the poll, right? Situation here, when we come back to this event is, I think there's going to be rolling comments. I've just been looking through the Federal Reserve site. I haven't got a lot of details on it, but if you come up here to serve the central bank, there are a number of officials speaking throughout the course of the day. Now, we've got here, 28th of August. So right on, we've got the Federal Reserve Chairman Jerome Powell speaking about the economic outlook, right? It's the keynote address for the symposium. I don't think that's going to be the key to it. What we want to hear is other comments following it. When are they going to come out? Well, whenever they finish, right? So it could be a while. You've got some other Fed officials speaking as well here and there, but we want to hear what Jerome Powell's got to say. I think it's evident in the minutes that they have got a plan. If employment continues to improve, they will start tapering their asset purchases. That's what they're doing. I can't see them changing that, except for you got to think to yourself, well, is there enough issues around the pandemic in the US at the moment to stop them saying that? I just don't know. It's borderline, right? That's why this has become an interesting tradable event, is because that doubt is borderline. What we are starting to see, we had Robert Kaplan, one of the hawkish Fed officials, saying last week that he was going to be sitting, well, maybe we should wait. And that's sort of, you think that'd be indicative of the other hawkish members. So the dollar drifted lower. But now we're starting to see some other regional Fed members suggesting we need to go at a faster pace, right? When things are picking up, we need to move forward. And that's where we're starting to see the movements in the equity markets. And that's reflected on the other pairs there as well, right? So that would be considered a risk-off day. If you're not sure about what comments have been made, etc., just come back and keep an eye on the equity futures or equities. During the Asian and European session, obviously the equity futures are a bit of an indication of where the dollar is going to go, or the equity markets. Once we do get the comments from the Fed, the equities will move very aggressively. And that'll give you the answer basically to where the currencies are going to go, or where the US dollar is going to go, and then all the other currencies follow suit, right? So it's going to be it's a pretty compelling event and pretty exciting because there's so many opportunities and to get into this. Outside of that, there are some US numbers coming out. There's some consumer confidence numbers there out of the Eurozone as well. You might want to keep an eye on those. The consumption numbers, they're worth having a look, right? So, and then later, well, actually in the morning as well. So we're going to have a lot of data to digest. The main bulk of any movements will be around the Federal Reserve comments. And one thing that you can do just to keep an eye on everything is keep an eye on those daily charts, right? This is the overall big move. So you can take out the noise here. Like euro is going down at this point, and it's right. That's why we might see a big spike is because it's right on resistance. Aussie's still going down. Kiwi's still going down. Sterling is trying to join the party, but not really getting involved. Dollar Swiss sideways, dollar yen sideways. And still, even with that big down move in dollar CAD, it's still going up. This is the one here, the dollar index, right, which is the basket of currencies. Sideways at the moment, but just heading above that bull bear line, or it was critical. Does the dollar rally? Well, the Fed will tell us if they mention we're going to start tapering. That's pretty much it, guys. It's probably as much as I could cover at this point without seeing what they say. Now, they can be ambiguous. I think this is a situation where they need to be very clear with their plans. I'm taking it from their minutes. They're going to stick to that plan, which is basically, let's see what the data is. And then, you know what, all this buildup of a potential move is rolled forward to the next non-farm payrolls. That's what I think really is going to happen. I can't see them saying we're not going to taper at all, right? I just don't see that big change of the plan because employment and CPI are very strong. If they did say we're not going to do it just now, they will come out with a comment like it's just because of the current pandemic situation, and that may be resolved as early as next week. So anyway, there's a chance for a bit of a lot of volatility, right? So make sure if you are trading, don't go in with massive trade sizes. You're going to get the volatility and movement anyway. The cash is in the overall trend, right? So what we wanted, to me, I want a strong dollar. It goes with the recent move. This week of trading has been a bit of a flush out, bit of a stall, loss of momentum of the dollar up move. The Fed could put this back in play, and then we've got nice, easy trading opportunities next week. Just be careful around the release, right? You get the keynote speech from Jerome Powell, and then we may get random comments here and there, or one big bulk download at the end of the meeting, right? We'll see how it plays out. All right, guys, all the best. Good luck, and we'll catch you later on. Cheerio.